And good morning, and welcome to In the News with myself, Savvy Sapphire. Welcome to the 29th of November already. As you know, this is the last week or few days in November. So I hope you've enjoyed November and it's brought you lots of goodies, and it's been able to navigate this month as well. For in the news for December, we are taking a break. So I'm going to tell you at the top of the hour, we're taking a break for December. We'll be back with a fresh new look, feel, and different news items for January 2022. So there will be no in the news for December. We'll be back in January. Um, Also, this week is coming up. We've got a nice Cyber Monday special for you. It's called the Property Investors Toolkit. If you'd like to get hold of it for the big old price of £37, it's going to really set you up for your investments for 2022. It's a lot of energy that's gone into it by myself. And I will, if you get the bump offer, I will be also teaching you how to use it. So I hope you go along and purchase that today. It's a good Cyber Monday offer. So I really hope that you can really get the benefits of investing in property and beyond, and how to save and navigate your expenditure for 2022. So I'll share the links in the comment so that you have access to this bundle. And if you don't see it in the comments or don't have access, please feel free to reach out to us. You can see the address on the screen. Please reach out to us as contact@savvywomen.co.uk, and I will get our team to send you the link, or go over to our website where you will see it on our website as well. So, what's in the news today? If you are here for the first time, welcome. And if you have any comments, remember to allow StreamYard to see your name so I can say a good morning to you all. If this is you're watching this on a replay, please type in hashtag replay so that I can say thank you for watching. So, what's in the news today? Well, in finance and mortgages, the title is Forget Help to Buy Equity Loans. Welcome to Deposit Unlocked. A house building led mortgage indemnity scheme called Deposit Unlock has now been launched nationally, with 17 major developers taking part. Nationwide is the largest, latest, and arguably the highest profile lender signed up to the scheme, and will offer products on new builds for both first time buyers and second steppers up to 750,000. Newcastle Building Society, which was the first lender to offer deposit unlock nationally, following a trial in the north of England, has recently seen the first completion under the scheme. Supporters said deposit unlock will help open up new build market to more borrowers who do not have access to larger deposits or the bank of mum and dad, and mitigate the demise of the Help to Buy equity loans. The mortgage indemnity scheme has been developed by the Home Builders Federation, and 17 of its largest members will be available on developments across England, Scotland, and Wales. Upon completion of the home purchase offer as part of the scheme, the developer funds and mortgage indemnity and deposits cash to cover any potential losses. The scheme greatly reduces risk for the lender, protecting them from a proportion of potential loss in the event of any default. Stuart Beasley, executive chairman of HBF, says ensuring people can buy a new build home is key to the industry ability to deliver the government's housing ambition. Too many people are unable to release their ambitions of home ownership because they simply cannot afford a deposit required. With the Help to Buy scheme has less accessibility, some regional markets, including many parts of northern England, with the program closing in at in 2023. A new option was required. This launched a testament of the foresights of investments up to 17 of their members. They say we are also grateful for the commitment shown by the two largest lenders, partners, who look forward to welcoming Evers in the coming months. So, what do you think about this? The deposit unlock to help new and second step ladders for buying properties. Do you think it's a good scheme? I think it's a wonderful scheme. I'm really glad that this has come out so it can really help those first time buyers get onto the property ladder without much delay. And getting the help for the deposits as well is a really good thing. In avenues, pilot scheme announced to limited second home ownerships. As you know, a pilot scheme has been announced to test ways of limiting second home ownerships and reducing the impact of additional properties from the local areas. The Welsh Government has selected a county for the pilot scheme, which will be launched in January. Few details are yet to be released, but it is thought that there will be schemes to increase share equity purchases for local residents, efforts to bring empty homes back into use, and what the Welsh Housing Minister calls rental solutions. Second home owners may also have to apply for planning consent if they wish to operate Airbnb style short lets. This will happen in parts of Wales where short lets are causing significant difficulties for communities. There is currently a consultation about these planning changes, and its results will shape the second phase of the pilot, which could involve making changes to the planning, taxations, and tourism systems, according to the Welsh Government statement. Minister of the Climate Change of Housing, Julia James, says, "We want young people to have a realistic prospect of buying or renting affordable homes in a place they have grown up so they can live and work in their local communities." So, what do you think about that? The Welsh Government actually stepping in to try and do a different scheme as well. I think everyone's on this different way of looking at things now and trying to really get the different schemes for housing so it can alleviate the pressure for first time buyers and people that need to still rent to live in properties that are suitable for them as well. So I think it's really good that all different governments are trying to really do something different to really help these people with this shortage of housing. In avenues, first time buyers crisis. Finding deposits seems harder than ever. House prices are relatively average earnings make raising a deposit a big barrier for first time buyers. New study shows a 20% deposit is equivalent to 110% average income for a first time buyer, a record high, up from 102% a year ago, according to Nationwide. Meanwhile, house prices have risen quicker than earnings over the last year, resulting in an increase in mortgage payment related relevant to take home pay. In the third quarter of this year, the UK first time house buyers prices to earnings ratio stood at 5.5%, above the previous high of 5.4 in 2007, and well above the long-run average of 3.8, explained Nationwide senior economics Andrew Harvey. While there continues to be a significant gap between the least affordable and most affordable regions across the UK, this has remained broadly stable over the last year. London continues to have the highest house price to earnings ratio at 9%, although this is still below the record high of 10.2% in 2016. Looking over the longer term, Northern England and Scotland has historically seen lower HPERs than Southern England and Wales and Northern Ireland. However, Nationwide says that first-time buyer mortgages payments based on an 80% a loan to value mortgage at today's interest rates are only slightly above the long run average at 31% of home buyers. So, what do you think about that? I've taken out these different issues for first time buyers because it is really prevalent that we really hear what's happening. Many lenders are recognizing it. Many governments and housing and local authorities are recognizing it as well. There is a shortage for properties for first time buyers. And if you're getting into the market now, you could be there, and that could be a niche market for you to get in and help first time buyers. In avenues, interest rates hikes won't hurt the market, lenders claim. Figures from the Building Society Association shows continuing momentum in the housing market, with gross lending by building societies up by 22% in the third quarter of this year, in the same period of 2020. During the third quarter, sorry, I've just got a message, but I'm not sure what it is. So let's just take that out. Take that out. During the first quarter, societies approved 109,575 mortgage loans, some 4% more than the third quarter of 2020. And the building societies hold outstanding mortgage balance of 351.2 billion, a 23% share of the total mortgage market. Andrew Gale, chief economist of BSA, says the strong level of mortgage lending activity in the third quarter by building societies and across the wider market suggests that the tapering of the stamp duty holiday has been a major barrier to property purchase. It is likely that the households will continue to reevaluate their housing needs in the post-pandemic world, which will continue to support demand in the new year. The Bank of England is sounding like it is ready to increase the bank rate from its historical low level of 0.1% over the coming months. Whilst this may see some mortgage rates rise, the vast majority of households are on fixed term products and so won't see an immediate change to their monthly repayments. Saving balances has also grown at building societies in the period. It is particularly pleasing to see an inflow of cash ISAs despite a 3.6 billion outflow across the market. So what do you think about that? Are you worried about the interest rates going up? Are you in a fixed mortgage? And can you get yourself in a fixed mortgage prior to these rates going up so that you don't have the mortgage rates, your mortgage payments going up unpredictably for you? In avenues, I've always said this about properties, that staging your home is key. So staging your home could add at least 47,000 when selling. Did anyone know that? Recent property market analysts by London Lettings and estate agent Benham and Reeves have found that staging your home during the selling process could boost your sales price by as much as 47,000. So what is staging? Property staging is essential when sellers are preparing their homes for potential buyers and making it appear to be the best. Staging can involve anything from getting a house a complete makeover, involving paint jobs, any little tidying up garden, decluttering and cleaning. Because when people are viewing your home, they don't want to see it, they want to see it depersonalized. So all those big family pictures or those purple flowers that you may like, someone else that's looking at your home may not like it. So decluttering it and making it welcome, that people can actually see what potentially your home could look like for them, is the best way to sell your house. So staging can also focus more on minute details such as replacing cupboards handles or updating taps and tiles, utilizing mirrors to create the illusion of more space, making a bed, and a dining room table, buying matching towels, cushions, and pillows. These are things that can add value and doesn't cost that much as well to do. Boost from staging properties. Benham and Reeves recommend that sellers should set their staging budget at 1% of their property market value, which is 2,642 on the average UK home. According to them, research staging can boost the price achieved for a property by 10%, an additional 26,424 on the average UK home buyers. This can also mean the average home could sell at 288,026. That's 23,782 more than the average home. A well-staged home could achieve an average of 573,224 in the current market, making it 47,330 more than a non-stage home. It goes on to show that there are different areas staging your home that can cost you, if you put 1% of what you're putting it on the market for and just do your house really nice, it will really come out well. There's many things that you need to look at, such as touching up the skirting boards, making sure there's no scuffed doors, looking at your door handles, looking at your kitchen cupboards, make sure that none's hanging off. Because you know when viewers come around, they do like to open the cupboards. So make sure inside your cupboards are clean. Your wardrobes, your bed's tidied up really nicely and it's not creased up. Covers, make sure all floors are hoovered and decluttered so they can walk around freely as well. I remember going into a property in London and everything was purple. I mean, the ceilings, the carpet, the walls, everything was purple. I mean, as an investor, I could see beyond that. But if that was going to be my home, I couldn't imagine me living there just because it was purple. And, you know, every room being covered in one color, such as purple, will put off buyers. So neutralize your space. Do your whites, do your creams. I know everyone can't stand magnolia, but it's not for you. It's for your future buyers. So they can imagine what a property would look like if they were to live there. I have a table for anyone who would like to see the table of what they could add to by staging their home and what the potential value could be. So please, if you want this table, please feel free to reach out and I'm happy to provide this table for you. There's also top tips on how to bolster your credit score. Now, this is another one of my favorites. Hang on, let me just take a sip. My throat's going. This is another one of my favorites, credit scores. I'm always harping on about how to get your credit score looking good in order for you to actually purchase property. So USITs compiled a list of common occurrences that can impact a credit score, along with potential remedies that can give you a boost. Maintaining a healthy credit score and can sometimes feel like it's simultaneously juggling and walking a tightrope. This can become more stressful when you decide you are ready to look into buying a property. Despite having a poor credit score doesn't mean that you can't buy a house of your dreams. There are options open to you, such as using a mortgage broker or receiving a mortgage with a higher interest rate. They're going to provide some handy tips. So here's these tips. Make sure you're on the electoral roll. Now, this may sound obvious to many of you, but also sometimes people tend to forget or they let it slide and time goes by. Being on the electoral register quite simply helps credit checkers identify who you are, which makes the process a lot quicker and easier for anyone involved. Sorry. Paying your bills on time. This can be the simplest way to improve your credit score, but also one of the easiest to forget about. If you're renting a flat, different bills may be taken from different accounts, which can lead you to forget certain direct debits. Different people paying for different utilities can also lead to late payments, as a cross wires. Work, university, or deadlines can create an overwhelming situation. It's always best to sit down together and set up a monthly automatic payment to avoid this. And this is what I suggest as well when it comes to paying bills. Make sure if you're sharing a property, make sure that everyone contributes 3 days before the bills are due, and then it goes into one deposit account for all of your direct debits to come out. That way you avoid in paying late bills. Consider a credit building credit card. A credit builder credit card was specially created for people looking for their first credit card, or those to find it hard to apply for more mainstream ones due to bad credit scores. The main difference of a credit builder cards are that the interest rates are usually higher and the limits are typically a lot lower. However, if you are mainly using it to build and improve your score, you should not it should not be an issue. Another one is keep an eye on your credit report. Now, this sometimes really people look over. I have my credit report coming to me every single month, and I've set alerts on there that if anything's changed on there, I'm aware of those changes. So make sure that you go to any of the credit score companies, Equifax, Experian, and any of those ones that are relevant to you. There is one out there that does all of the credit scores, all of the major people that do the credit referencing. Go to them and register so that you can have your credit report coming to you each month, and keep an eye on it, because that would really help you with your credit rating as well. Keep mature accounts open for as long as possible. This may not always be possible, but some lenders find it appealing if you have managed to keep accounts open for long periods of time. Being able to manage multiple accounts, especially for a while, would highlight your ability to maintain payments on time and from multiple sources. So, sorry. Yep. So definitely do that. Stay on top of your payments. Try to stay in the same location for as long as possible as well. Staying put is usually easier said than done. However, if you have been renting the same property for a number of years, a lender could see this as a sign that you are highly grounded and pay your rent on time. Moving around a lot can possibly be a sign of not being able to pay rent on time, even if in reality is easily explained for your circumstances. The team at USwitch is always on hand to offer tips and tricks, but always seek the guidance of a qualified mortgage specialist when making any money related decisions. USwitch is a price comparison service and switching website for energy, personal finance, insurance, and communication services. So go over to there and see how you can bolster your credit score. In avenues, a new buy-to-let lender aims to help landlords ignored by big banks. Recognized banks has entered the rental market with a new product designed for professional landlords and investors with portfolios of at least 4 properties. The product, called Professional Buy to Let, is recognized for first new mortgage since receiving full authorization and the lifting of deposit restrictions in September this year. With rates from 3.4%, borrowers can choose a 5-year fixed rate deal or a variable deal linked to the Bank of England base rate, with a maximum loan to value of 75%. Loans are available from 100,000 up to 5 million on either new acquisitions and or refinancing existing portfolios of 4 properties or more. Repayment and interest only options are available for terms of up to 10 years. The loan can be used for single let residential homes or blocks of flats let on a AST based on the open market UK based individual partnerships, limited companies, and LLPs that meet recognized criteria. The bank claims that by focusing on borrowers who already have a significant property portfolio and by offering a range of flexible options, it aims to help raise the quality of rental properties in the UK. Angelina Norman, head of the corporate development at Recognise, says we want to do more than just offer borrowers a buy to let loan. We want to show them that we are interested in their business and to support their success because we take a personal relationship approach to all our lending. It means advisors and their clients can have a proper conversation about their portfolio, knowing we understand their needs and we are able to offer a right funding solution. Recognised Bank was created to serve SMEs that's in a word are being ignored by the big banks. What do you think about that? Do you think it's a welcome thing for us to have this now? I'm so happy this has come out because it allows people that has a portfolios already that is sometimes getting a hard deal from the mainstream banks can now go to these types of lenders and get the help that they need. In avenues, controversy as cryptocurrency investors focus on buy to let. Property is fast becoming a preferred investment option for the advocates of Bitcoin and other cryptocurrencies, and investment companies claim. They claim that investment claims that 25% of those surveyed admitted that their property purchase was wholly or in part funded by profits from cryptocurrency. Sorry. Daniel Jackson, sales director of Square, comments, cryptocurrency has been its profile increased rapidly over the past 5 years. And the people who have lots of it are now looking to find ways of making it work for them. Rather than sitting on and hoping it doesn't crash. Properties which with a solid value and good returns is unsurprisingly second only to stocks as the most popular crypto investment asset. Within the industry, buy-to-let is one of the most profitable and immediate pathways to a good investment. And despite the UK government attempts to dampen profit margins, crypto investors are looking into the sector to balance their portfolios. Earlier this year, Nigel, a director of National Crime Agency, told the Times that he had serious concerns that properties were being purchased with cryptocurrency by organisation, crime syndicates and laundering cash. In the summer, Leary said he was sceptical of those paying for high-value items such as property via cryptocurrency, because the main reason behind those that choose for pay methods was that they had identified of the buyers and the source of their wealth. He also advised the property industry that until greater crypto regulations were introduced, checks on transactions made using currencies like Bitcoin should be made. So what do you think about this? Do you think that buying using cryptocurrency is a bad thing, or do you think it's avoiding taxes and things like that? If you're in the crypto space, as I am, I think it's a good thing. I think that the opportunity to purchase properties or anything that you want to purchase using money that you've earned and made via this method should be able to be done. Yes, checks need to be made and all those things need to be done. However, using your funds to do things like building your assets is a good thing. What do you think about this? Do you think the crypto space is something that is an anomaly with a lot of people? Or do you think that people should use this space to purchase different assets and should be allowed to do it? Please share in the comments. So what do you think about cryptocurrency? If you're going to share a comment, please don't forget to share #replay if you're watching the replay. In avenues, scam using Facebook Marketplace sees tenants lose 1,000. A scam in one city has reportedly seen scores of individuals robbed of thousands of pounds in short lets have been disgusted and controversial long-term rental units. The BBC says a key target is in Edinburgh's student population. The city has an acute shortage of properties and has previously been claimed 1 in 8 centres homes have been on Airbnb or similar platforms. The BBC research has uncovered a number of individuals willing to discuss scams in which they lost money combined thousands of pounds. It appears one particular fraudster targeted a flat owned by a private company providing accommodation for tourists. Some of the photographs used in the legit advertising for the property were used by the scammer calling himself Wilson, who reposted the images with his own advert in a Facebook marketplace. He lured potential tenants with low price and sent these expressing an interest a list of letting documents, including registrations of Scotland, a paperwork, and a fake passport of William Wilson, their apparent landlord. But the ownership papers and bank statements did not match. His landlord number was linked to a different business, and the passport was also suspect. It was a unique number, wasn't visible, and is hard to look at, like electronic signature. The BBC says the fraudster victims didn't notice until it was too late. So what do you think about that? Do you think, like, when you're marketing, you should always do your due diligence? I've always said it, and you should always do your due diligence when you're looking at these marketplaces and things like that. It's not Facebook's fault at all. They do what they need to do, but it's an opportunity, and any person that's doing a scam would look for various opportunities in which to do it. It doesn't take away what platform it is or how they sell it by your phone. If you're getting texts and or messages on your phone, if you're getting emails, always make sure that you do your checks before actually handing over large sums of money. Sorry for those that have lost, but you need to do your own personal investigation before handing over any type of money and make sure that these people are genuine and legit. So that is all we have for you in the news today. I hope you enjoyed it. Don't forget to leave, if you're watching a replay, don't forget to say #replay. And thank you for joining me. Have a lovely Monday and have a lovely week. And I hope you have a lovely holiday. I will not be doing in the news with myself for December. We'll be back fresh and alert in January. So I look forward to sharing more in the news with you in January 2022. Have a lovely week and have a lovely Christmas holiday as well. Hope you enjoy it with your family and your friends. And I'll see you in 2022. Speak to you then.